जिंदगी भर का साथ, lifelong companionship is what makes LIC Jeevan Anand one of the top selling plans of LIC. But if you are wondering whether it is a good plan or if you should buy it or not, or even if you have bought it, what kind of returns can you expect from it? Or what are your other options? You are at the right place. Hello and welcome to our channel 5 Minute Finance by ET Money, where we talk about the basics of personal finance. Today's video is going to be all about understanding the LIC New Jeevan Anand plan. We'll look at the features that make this plan so popular. We'll cover the pros and cons as well, and the interesting part, we'll find out the returns you may expect on your investments in LIC New Jeevan Anand. This will help you compare the plan with other investments. That's not it. We'll also be discussing better investing options that come with higher guaranteed returns, just like government schemes. So stay tuned and be sure not to miss the end part of this video. Let's begin with some basics about the policy. LIC New Jeevan Anand is a traditional life insurance policy. It is a combination of insurance and investment. It is a non-linked participating plan. Now, non-linked means returns are not linked to the stock markets. Participating means policyholders are rewarded with bonus depending on the profits LIC earns from the policy funds. Anyone between the age of 18 and 50 years can buy it for a policy term between 15 and 35 years. And the age of the person at the time of maturity should be 75 years or less. Coming to the insurance part, the minimum sum assured or life insurance cover you can opt for with LIC's New Jeevan Anand plan is 1 lakh rupees, and there is no limit on the maximum life cover. But what makes this plan so popular? Let's look at the unique features. Well, the major reason is that you get both death and maturity benefits. What happens in a typical term insurance policy is, if the policyholder dies during the term of the insurance, his or her nominee is paid the sum assured and the policy ends there. But in case of LIC New Jeevan Anand, there is both maturity as well as death benefit. Now listen to this carefully. In case of LIC New Jeevan Anand plan, if the policyholder dies during the term, the nominee or family member gets the death benefit. But if the policyholder survives, sum assured is paid to him or her as maturity benefit. The benefits do not end here. So if the insured person survives the policy term, as I said earlier, he or she is paid the maturity benefit. But the life insurance part still continues even after the maturity of the policy. So if the policyholder survives, the policyholder gets the maturity benefit. And on death of the policyholder, eventually the family gets the death benefit. That is what LIC calls as the twin benefits of maturity and lifelong insurance cover thereafter. Next, let's understand the death benefit and the maturity benefit. Let's take two cases here. One, where the policyholder dies during the policy term, and two, where the policyholder dies after the maturity period. So in case of death of the policyholder before the maturity of the policy, the nominee or family members will get either 125% of sum assured or 7 times annualized premium, whichever is higher. Plus, the bonus is accrued during the term of the policy, plus the final additional bonus. So if we take an example of Ramesh, who has taken a life insurance policy of 50 lakh rupees, the assured death benefit will be 125% sum assured. It comes out to be 62,50,000 rupees, plus additional bonus accumulated every year during the policy term, plus final additional bonus if there is any. Now coming to case 2. If the insured person dies after maturity period. Here the insured person will get the maturity benefit and the family members will receive the death benefit. Let's look at the death benefit first. In case of death after the policy term is over, only the basic sum assured is paid to the nominee. In the case of Ramesh, that will be 50 lakh rupees. No bonuses are paid. Coming to the maturity benefit. Now, this is where you would want to know what kind of returns you will make with your investments in LIC's New Jeevan Anand plan. So, if you survive the policy term, you would receive basic sum assured plus bonuses accrued annually during the policy term, plus final additional bonus if there is any. We did some calculations to find out the approximate returns on LIC New Jeevan Anand policy. Now, here we have made certain assumptions which are on your screen. We have taken the person aged 30 years, policy term is 20 years, sum assured is 50 lakh and the person survives the policy term. Now coming to the bonus part. We have assumed a yearly bonus of 46 rupees per 1000 of sum assured. This is the average of last 3 years of actual bonus declared by LIC. So the calculations are on your screen. And based on the same, the XIRR of the product comes out to be 4.7%. That's around 5% we can say. Now there will be a final additional bonus as well that will be paid to you at the time of maturity. That may increase your return slightly. But since it is not guaranteed and it depends on the profits of the fund, we have not accounted for it in our calculations. Now coming to the big question, should you invest in LIC New Jeevan Anand policy? Well, the benefit of lifelong insurance cover is a good feature. You'll also get dual tax benefits under Section 80C and Section 1010D, where the premiums paid qualify for deduction up to a limit of 1.5 lakh rupees. Also, the maturity receipts or death benefits are tax-free. But returns of around 5% is a dampener. If you are investing in this scheme for your long-term goals, you may need to think again. Well, but don't get disheartened. There are other traditional plans which offer higher and guaranteed returns just like government schemes. These plans are available at your fingertips on the ET Money app. These guaranteed income plans can be a great choice if you're looking for risk-free guaranteed returns over a long term. So the guaranteed income plan on the ET Money app offers a higher guaranteed returns of up to 7.1% tax-free. This effectively means 10.14% pre-tax returns if you are in the 30% tax bracket. The returns are guaranteed for a very long term of 8 to 30 years. The guarantee, if you see, is even longer than that offered in government schemes. Now coming to how it works is, first you choose for how long you want to invest, 8, 10 or 12 years. You can opt to invest monthly or annually as per your choice. And you can get a completely tax-free guaranteed monthly income for up to 30 years. Plus, you get your invested money back at the end of this tenure as well. So for example, if you choose to invest 2,40,000 annually for 10 years and opt for a monthly income of 30 years, you will get a monthly income of 24,558 rupees for 30 years. And at the end of 30 years, you will get your invested amount worth 24 lakh rupees back as well. All of this would be completely tax-free and risk-free. That's not it. You also get a life insurance cover of up to 11 times your investment amount. So go to the ET Money app and do check out the guaranteed income plan to meet your long-term goals. This wraps up this video. Please don't forget to like and subscribe to our channel, and we'll come with another insightful video soon.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.